Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar faced another down day on Wednesday, leaving traders uncertain about the broader direction amid lackluster economic data and cautionary remarks from President-elect Trump. Investors are now bracing for the highly anticipated US job report later this week or Friday as the US dollar refreshes its highs around 108.80 to 109. Federal Reserve's December meeting minutes, however, highlighted concerns over persistent inflation, noting recent elevated inflation readings and high uncertainty in emerging economic data. Inflation remains the wild card for 2025 as several officials debate slower interest rate cuts and speculate on potential trade tariffs under Trump's administration. As I mentioned, traders will be focused on Friday's non-farm payrolls report, which is expected to add 164,000 jobs, while the unemployment rate unchanged at 4.2%. In other news, the ADP revealed slower job creation and wage growth in December, with employment rising by 122,000, down from 146,000 in November. Markets are likely to be a little bit quiet into today's session as the US market will be closed on Thursday for a national day of mourning to honour former President Jimmy Carter, who passed away on December 30. So as I mentioned from the technicals, we still need to get above this level of 62.45 to give some hope of a further rally on to 63 or even where the 60-day moving average is, which is seen roughly around 64.48. A big drop from where it was back in October. That was around 67 cents. Nevertheless, the bears are still weighing on the market. So let's see how 61.75 plays out. And if we get a rejection, let's see if the market can re-challenge that top side. The euro also weighing on the support as the US dollar refreshes its highs, as I mentioned, around 108.80. In view of how the technicals, it's a little bit mixed, but I still believe there is still hope of another challenge to the upside. And if so, look towards 104.0515. The break there gets further scope on to 104.60 to 105.25 and support seen roughly around 102 now, 55.60, 65. The dollar yen just edging, even though there is bearish divergence, and I still feel the market may take a tumble or even reject this top side level, which is anywhere from 158.60, 80. I still feel the market may potentially head towards that bottom side call, that is, 156.70, 75 and reassess. Sterling, having rejected the topside trend line somewhere around the region of 125.40, 80, the market plummeted overnight and now finding support around 122.35. A little bit concerning on how heavy the bears weighed on the market. Let's see if we can get a bounce off this level seen at 123.35. And if so, retrace some of the losses back towards the region of 124 to around 124.60. And now seeing the downtrend, that is close towards the region of 125.20. Spot gold cheers as it claims the level around 2,650.60 and still may have further upside momentum. There is still a lot of talk this year that the market may reach 3,000 as a potential target. But in the interim, let's see how the bulls play it out and look towards 2,678 to 88 to the recent highs around 2,700, figure 10 to figure 20. Another test to that topside level for oil at $74 a barrel was rejected as profit taking was more evident this time and now may play into today, and that is looking down towards the region of 70.70 and reassess from there, just in case we see an extension towards 69.80. Nevertheless, the topside rejection for the second time is a key warning that the bears are likely to come in greater numbers and weigh on the market. Well, that's a wrap. Thank you for joining me. And as always, look out for the intraday report, and I hope you enjoy the great start to the day.